Well, one day removed from GE's plan announced yesterday morning to split into three companies. Of course, a company we know well, having worked for it when NBC was one of those many properties that were eventually sold. Many say at lows instead of highs, and what was bought at highs. But many people still reacting to that decision, including longtime former employees of the company. Earlier this morning on Squawk Box, you may have heard from Ken Langone, former GE board member, Larry Bossidy, a former member, senior executive at GE before he moved on to Allied Signal. Let's bring in somebody else who spent a long time at the company and runs a pretty big company of his own, soon to get a lot bigger. He's David Zaslav, CEO of Discovery, and joins us on the phone. You know, David, just give me your reflections, of course, as a longtime member of the business community here, and certainly one who spent a lot of time with Jack Welch during what were the great days at GE, as you heard that news yesterday.
Thanks, David. Well, look, I mean, Jack really created the first industrial global conglomerate. When we think about global companies now and the FANG companies and the scale and leverage and impact they could have on the world, that's what Jack created with the first global company. I mean, he was in a massive balance sheet, great intellectual capital, the best and the brightest people wanted to work there. Jack himself, a force of nature. But, you know, it was when things got bad at countries, or when in the 80s, when the economy turned, it was really GE that was the backstop. GE and Jack were sort of like what Jamie Dimon and J.P. Morgan were during the financial crisis. And when big assets were sold, it was GE. When companies needed to borrow money to stay afloat, it was GE. When Agnelli was having trouble staying alive with fiat, and he was so much of the GDP of Italy, it was Jack and GE that got in there and kept Italy going at a time when if they had fallen, you know, Russia was at the border. So, I mean, he was the industrial conglomerate at that point, GE. It was heady times, and it was very, very big impact. You know, the world has changed, but I think Jack's philosophy of being number one, and if anything this tells us, is you have to earn it every day. If the consumers and businesses don't wake up every day wanting to buy your product, then you know, you can't continue to be the most admired and the company of leadership around the world.
Yeah, I mean, listen, we spent a lot of time analyzing what was the slow but steady decline of many of those businesses you're discussing, and many of the decisions that were made after Jack, of course, by longtime CEO Jeff Immelt. But David, I mean, to be fair, you know, do you think that GE Capital, for example, which became so large and profitable during Jack's tenure, should have been reined in earlier? You know, if it had been, would things have been any different than where we are today?
Well, look, I think that the whole question of an industrial conglomerate and the synergy between, there was always a question and, you know, I would ask Jack and the analysts would ask, and they would ask Jeff, what's the reason why GE needs to be together? Even if you have 12 first-in-class businesses, what's the synergy of having them all together? And the real synergy was intellectual, you know, the best and the brightest people and the ability to rotate them around. There was always this issue of GE Capital because GE had such a big balance sheet. You know, they owned so many assets, and eventually GE Capital really became a massive bank. And, you know, when the economy turned, you know, what happened in the 80s where GE saved businesses and saved the economy, that GE itself needed to be saved. So I think you're right. At that point, something was going on at Capital that was putting the whole company at risk, effectively.
Well, that premium that investors were once willing to pay for a conglomerate obviously has gone the other way. There is a discount. At least that seems to be the thinking of current management under Larry Culp. Do you agree with the plan as we now know it, to split the company into its three component parts? Do you think it's a good move?
You know, I'm not that close to it, but if you look at the culture, things have changed. In fairness, I think Jack saw for the last 10 years that GE wasn't the same and something was going to need to be done. And look, malls aren't what they were. You know, and the way people buy product, the way businesses are aggregated, I think in the end, it's probably the right thing. The market will tell. But the real question is, having all these different businesses together, what is the synergy? And the synergy before really was a philosophy of being number one and having the best and the brightest people. And a great leader in Jack in the middle. And, over the last 20 years, I think a lot of the reasons for doing it have fallen apart.